Hello investors and future investors, welcome to the channel. For today's video, I'm going to be showing you one of Nancy Pelosi's option strategies that has given her millions and millions of dollars. She is estimated to be worth upwards of $250 million. Now here's the good thing, right? If you're new to options trading, these option strategies are going to work for you as well. So you definitely stumbled onto the right video. Welcome to Investment Gains. Let's jump right into it. Welcome back, investors and future investors. My name is Tim, and on this channel, I show you how I use my portfolio in order to make consistent income. For today's video, I'm going to be going over one of Nancy Pelosi's option strategies. I'm going to show you how you too can use this option strategy if you have the patience in order to grow your portfolio exponentially. Now, for today's video, we're going to be using none other than the trade desk. Now, before we go ahead and get into these option strategies, I have two basic requirements that I ask of my viewers and also my subscribers. Quite simple requirements. Number one is always going to be always make sure to do your own due diligence before investing. What might work for my portfolio, quite frankly, may not work for yours. The second requirement is going to be always make sure to have an exit strategy before entering any option trade. That way, if the trade does decide to go against you, you're able to get out of the trade. Now, let's go ahead and get down and dirty with options. For today's video, we're going to be using none other than Trade Desk, and that ticker is going to be TTD. Now, let's go ahead into the Robinhood Advanced feature right here. In order for me to demonstrate the chart, we're going to be going over to the 1 year outlook. Now, this is a very, very nice setup for us retail investors. If we get a setup like this on a good company, we could simply go ahead and invest into the company because we have this information at our disposal. However, for members of Congress, most of them have what's known as inside information, but we're just going to use TTD as an example. So for instance, if they know that a stock is going to be going down or a stock is going to be going up, then they decide which option strategy they're going to use in order to make that money. Now, for this setup right here, what I would be doing is I would be being bullish on the option strategy, and that's because this is a good company, number one. Number two, the share price is currently trading below the 200-day moving average and it's fell down way off its high. So I would be absolutely bullish on this option strategy. Now let's go ahead and go back to TTD options, and I'm going to show you the strategy that Nancy Pelosi uses. Actually, one of the strategies she uses. So we're going to go to trade TTD options to the bottom in order for us to open up our option chain. Now, this information down here represents the entirety of the option chain. And what it does is that it gives us enough information in order for us to make an informed decision. Now, let's say Congress is extremely bullish on a simple stock, then this is the strategy they're going to do. They're going to simply go to buy, they're going to go to call, and they're going to select a strike date. The strike date, what they're going to use is going to be 365 days or beyond. So you could pretty much use June 18th, September 18th, or January 15th. Any one of these are going to be good. Just for the purposes of this video, we're going to go ahead and use the June 18th, 2026, which gives us exactly 1 year to expiration or 365 days. Let's go ahead and select that. Now, based on the setup that I just showed you, I'm extremely bullish on this stock. So if they're bullish on the stock, they're going to go ahead and choose their strike price. Now, if they have insider information what's going to happen, then they're simply going to choose a price either at the money ATM, or they could choose a strike price above that as well. But for normal retail investors like us that do not have that information, we need to be a bit more conservative. So if I were to do this exact same strategy that Congress uses, instead of going at the money, because I don't have that kind of information, I would go for the $65 strike price. Now, that $65 strike price is going to give me a 0.675 delta. You could see delta right to the top. Now, delta is very important when it comes to options trading, especially when you're doing these buy calls. Now, because this is a buy call, we're going to have to pay for it. The amount we're going to have to pay for it is going to be $18.60 or 55 cents. The stock market is currently open, so you're going to see some fluctuations in prices. We're going to go ahead to continue. And voila, this option strategy is going to be known as a long call option strategy or a leaps option strategy. When you're doing this option strategy, it is a bullish option strategy. So whenever you decide to implement this option strategy, you are of the mindset that whatever stock you invested in is going to go up in the long run. So this is one option strategy that Congress, especially Nancy Pelosi, uses in her portfolio. And you could find out the stocks she have in her portfolio, the option strategy she used by doing a simple chat GPT, or she have to file with the SEC. So that's a very easy way to find out what she uses and the stocks that she uses. Now, this is how they really make the money. For us retail traders, we could do probably multiples of 1, 2, or 10 contracts. But with someone trading with millions of dollars, what they go ahead, they're now able to use a lot more leverage. So we're just going to go ahead and put in 100 contracts just as an example. So this 100 contracts is going to cost $181,500. Now, once you get this, the leaps option in your portfolio or the long call, all you do with this option strategy is that you do absolutely nothing. So Congress does nothing with the leaps option. They absolutely leave it in their portfolio because they have lots of money. They don't need to do anything with it. Stay to the end of the video. I'm going to show you what us retail traders are going to do if we want to make money while we're waiting for this share price to go up. So now that they have this long call or leaps option in their portfolio and they're just sitting on it, stuff is still happening. So what we're going to have after a certain period of time, we're going to have a share price appreciation. So the share price is going to go up. Now, there's a very high likelihood that the share price is going to go up if you have insider information. If you do not have insider information, there is still a very strong possibility the share price is going to go up. And that's because the stock market usually goes up way more than it does go down. Now, let's just say the stock makes a movement from the 68 price right here. We are going to use $68 flat in order for us to use our calculation and make it a lot easier. So let's say it moves from $68 right here to $80 right here. That is going to give you a $12 move to the upside. Now, you are dealing with options here, which is a leverage product. So a $12 move to the upside is going to represent a $1,200 move. So that's going to be your $12 multiplied by 100 shares because each option contract contains 100 shares. Now, here's what's going to happen next. That $1,200, you're going to go ahead and multiply by the amount of contracts which you did, which is going to be 100 contracts. So now you're going to be up $120,000. Now, you up $120,000 based off of the amount of money you spent, which is $181,500. So right there, you can see how lucrative this option strategy is. Now, that is just going to be your gross. What you're going to do now is that you're going to multiply your $120,000 by your delta. I'm not sure if you guys remember the delta on this. The delta on this was 0.67. So you're going to multiply your 120,000 multiplied by 67%, which is going to be your delta. So your net gains on this trade is going to be $80,400. Now, let's see what percentage that is. Now, $80,400 is an extremely high amount of money for you to make in less than a year. I mean, some people don't even work for that amount of money in a year. Now, let's see the net gains on that trade. You're going to take your $80,400 and you're going to divide it by the amount you paid to enter this option contract, which is $181,504. And that's going to net you a return of 44%. And this is one option strategies that Nancy Pelosi uses in her portfolio in order to get these insane returns. Now, whether you have inside information or you do not, everyone, even us retail traders, can use this option strategy in order to multiply our portfolio. Hence, I'm making this video to show you how this can be done, even if you're only able to trade one contract. Now, for those of you that made it this far in the video, here's what you're going to do if you're a small retail investor like myself, which we could only afford one contract. So that one contract is going to cost us $1,815, which is not too bad. You should be able to afford that with your small account portfolio. Now, what the big people do, or the politicians, they're able to sit on this contract until the share price go up. When you're trading with a small account portfolio, however, we don't have that luxury. We need to make at least some amount of money right now. So if that's the case with you, this is what you're going to do. You're going to leave this long call or leaves option in your portfolio, and now you're going to use that to act as collateral in order to go ahead and do a secondary option strategy. let me go ahead and demonstrate that secondary option strategy. So now you're going to go ahead to sell. You're going to go ahead to call, and now you're going to choose your expiration date. Now, because your leaps option is about a year out, we're going to go ahead and choose a shorter time frame for this trade. And we're going to be going with July 3rd. Sorry, we're going to be going to July 11th, which gives us 23 days to expiration. Now, what we're going to do now, we're going to go ahead and select a strike price above the current share price, and we will be going with, let's go with the $79 strike price right here. Now, that $79 strike price, it gives us a 91% chance of profitability. As you can see, chance of profitability here. A 91% chance of profitability tells you that there's a 91% chance that this trade is going to work in your favor. Now, because this option strategy is now a sell call, it's an income generating option strategy, you're going to be paid. The amount you're going to be paid is going to be 0.35 or $35. Now, that $35 you get right away. It's yours to keep no matter how this trade goes. When this expiration date comes, if the trade does work in your favor, if this share price remains any place below your $79 price here, you keep your $35, and then your leaps option that you use as collateral, that is now freed up in order for you to do this trade again and again and again. Now, remember, it is fine to make some additional income while you're waiting for the share price to go up. But always remember the primary goal. The primary goal is to make sure you keep your leaps option in your portfolio. So when the share price appreciates, you're going to be able to capitalize on that capital gain. Now, if you want, you could go ahead and choose a lesser strike price. But remember, the lesser strike price is going to pay you way more money. But however, the lesser you go down with the strike price, you're going to be putting your leaps option in jeopardy. The choice is yours. So investors and future investors, that is how Nancy Pelosi, actually that is one of her option strategies she used. If you guys want me to go ahead and make a video about the other option strategies that she utilizes in her portfolio, then let me know in the comments below. Although Congress uses this option strategy in order to make lots of money, they're able to sit on this option strategy. We, as small retail investors, we could go ahead and add an additional option strategy in order for us to make money while we wait for the share price to appreciate. Hence, this trade can be used. Now, the name of this option strategy, where you're allowed to use your leaps option in order to go ahead and make regular income by selling calls against it, is known as the PMCC, or the poor man's covered call. So there you have it, investors and future investors. Anyone can use these simple option strategies to make continuous income and grow their account portfolio. So for those of you guys that made it to the end of the video, you guys are the real investors and future investors. Go ahead, like the video, subscribe to the channel. Ensure that you hit that notification bell to get an alert when I post a video. But more importantly, if there's anyone out there you know struggling to grow a small account portfolio, then the right thing to do is to go ahead and share this video with them. We're trying to help as many as we can get away from that regular 9 to 5 by making money with options trading. Now, I do offer one-on-one coaching. If you guys are interested, the link is going to be in the description below. Now, until the next video, keep pushing your investments.